Hey, welcome. We are live and getting started in crypto on X, on LinkedIn, on YouTube, and of course on Instagram. So, hey.
We are. Good morning, good afternoon, good evening, everyone watching in. Hello to those watching the replay as well. Monday morning here in the Northern Hemisphere, waking up to quite a red-looking market. I don't even particularly want to look at the bags or anything right now.
Well, apparently $2 billion was wiped off the market in liquidations. So it's like, ouch. So when stuff like this happens, stop losses don't trigger. There's not enough liquidity. It just goes straight down. I had a heap of stop losses on my long-term bags, jumped. So they're now hodl bags forever. They're very heavy bags. It's like, walking along. So if you were in that carnage, it's like, yeah, it's not nice. It went straight through the support that I had and has changed into an alternate pattern, and we'll look at that today.
And I'm assuming we normally do a bunch of alt requests. I'm assuming they're all going to be looking quite the same.
Oh, they're definitely going to be looking quite the same. But there's a couple of key things that we are looking for at the moment. So I'm going to pull up a couple of alts that have hit that and show you what is happening with those and why you should be looking to these bounces for what you're putting your money in for this next run, because this is not going to drop forever. We've probably got one more wave down on Bitcoin. We're at key levels on a lot of alts and on the total crypto market cap. So that says to me that we are nearing a reversal. This looks like capitulation. That's what we want. So these tariff wars are giving us that capitulation, and that'll put us out of this boring momentum, and we'll get some like fun back into crypto. It's like we'll put the fun back into crypto, woo! Because this part of the market is never fun. So especially if you're leverage trading, if you're in the right way, it's amazing. So if you were following my chart and you had an E wave and you just let it run, or you sold, bought back at the support, would have made lots of money. But if you were in the other way in a leverage trade, would have lost lots of money. So, and normally that takes, until the next sort of pay cycle to sort of settle out. We sort of trend sideways for a little bit once we get the bottom, and then it starts to flow. So this is going to be maybe mid-February heading into March. We're going to be looking really green. But for now, we're going to be just consolidating a little bit more. It's going to stay boring. I don't think we're going to get those bounces that we really want yet. So, yeah. Any other news in the market?
Well, we've got Jay making a comment here for us. Just so you guys know, I gobbled up $2 billion today, and we'll be buying fart coins with that. So not all is lost.
It's probably, what are like Trump coin, fart coins? It's like this market has gone absolutely crazy.
Well, it sounds like from what you're saying, there is a silver lining, and there is hope out there. So let's see.
So let's have a look at my silver lining playbook.
Let's have a look at the silver lining playbook. Let's do that. Yeah, all righty.
It's a bit early for Josh over there, and it's a bit cold, so he's got to thaw out. Over here, it's like 37 degrees, and we're like absolutely baking, so it's complete opposites. And that's Celsius for anyone over the other side that's going, whoa, that's cold. It's like, okay. So let's jump into Bitcoin. So we can see we've got these 3 candles here. They don't always get really ugly. These ones sort of bounced and went sideways, and we got a doji candle. We haven't got that yet. We've still got about 16 hours on this daily close, so that potentially could happen. If we do get a doji like this on this candle, that's a really strong sign that we're going up. So when we're having a look, we get green candles. We normally get, after that, a continuation up. When we get red candles, we get a continuation down, sometimes sideways, then a doji, and then up, as is seen on this pattern here. So we can see 2 candles, a bit of a pause, 3 candles, but this one was not a full candle. So when we're getting quite large candle bodies, that's when you want to go, hang on a sec, there's a lot of sell pressure here. There's not a lot of bounce. When you're getting 3 candles that have a long wick on the bottom, that's when you want to buy. So because you can see here, especially if you're scalping. So knowing Japanese candles is a good way to scalp. So there's so many ways you can validate where to enter on a scalp, where not to enter. Like this is a higher time frame, so you're not going to be scalping. But if you're on a lower time frame, same sort of candles will be appearing. So we've got 3 candles, but this one has only a tiny little short body, and then it's got a long wick. So that means we're about to go up, which it did. So then this one's got a break, so it just means it's a consolidation pattern. You can see that we've got 3 candles here, and this particular candle, when it has, it's called an exhaustion wick, which it means the sellers are exhausted because it's now green and it's turning up the other way. So that's something to look for as well. So you want to be looking for the green candles. You know they're going to be going up. So we've got 3 candles here, but we can see this one's got a wick. So that means that, you know, the buyers are entering into the market, and this is coming to a bottom. So, and as we can see with this doji, that is our bottom on that run. Here, we haven't got that yet. So this is a daily chart. So obviously we have to wait until we see this candle tomorrow to know where we're going to be. So at the moment, it's still looking quite bearish. The wick is getting better, but we do need to get over this 96K mark for this to be then changing momentum, because that's kind of how it's going to close with a smaller body and a larger wick. We'll probably get one more pullback and then going like a continuation up. So what that might look like is if we can close up above that 95, it's going to come back down, probably get a doji in this region here, and then a continuation up. So, and that fits with an Elliott wave pattern. So if we're going to Elliott wave, we're going to be looking at a WXY. So WXY, Y wave can be a really like violent sort of wave, like a wave 3 going up. The Y wave has that same dynamic where it's like just smashes down. So that has happened. It can go as low as 87. There's a strong support region there. And if we put some fibs on that, we can see that we nearly hit the 1.236, which is a really nice retrace. So what I think may happen is we're going to just come back up. We might come down to that region, not going all the way down to that support, leaving those buyers down there going, oh my God, FOMO sets in, they have to buy higher. So that's a way that whales will play to make people start buying higher. So then you've probably sold, you know, your stop losses went off at about 95. The wick is going to move up so fast that you're going to be buying higher. So even if you sold at 95, you're probably buying at 98. So, and then they'll push it down again. So it's best to wait a little bit longer. And yeah, so that's essentially how the market kind of dynamic works. If we do continue to see this, let me just take that off. These candles, and we get this candle here with a full body and hardly any wick. We know tomorrow we're going to have another red day. So that is going to be something that you need to be watching for. And that is going to, you know, sort of keep that dynamic continuing lower. And that's due to the tariffs and the tariff war that's happening at the moment. So there's a lot of money coming out of the market due to those reasons. So just keep an eye on that candle on the daily, because that's a really important close. Ideally, we want to see it close above 95, 96, and that's going to give us a nice wick on that candle, giving it a more bullish momentum. So that's what we're looking for. We can see here on my tiny little, I don't know why I've got a tiny one, but we've got the three, what they call three black crows or three white crows, where they go down, and a continuation lower. So that's there's a deeper pattern for BTC where we do potentially see 75 and down in this region with the 200 MA. So just keep in mind, if you are leverage trading, that is possible if we continue to get full body red candles. So if we're not filling in above that key support. Bitcoin dominance went absolutely bonkers today and hit 65. So this is a really sort of telling market. We can see that, back, it doesn't want to open. This is, let me go back. We can see before we had, the craziness of 5 million alts in the market. Bitcoin had like the key dominance of like 95%. So this is back in, 16. So this is when we started getting that 2017 run. And then as more and more sort of alts came into the market, XRP, Litecoin, at that point, BCH, those sort of, in all the, Bitcoin Gold, all of those sort of BitConnect tokens, then that sort of took the dominance down, because there was a greater impact on the market for other, demand for other stuff like Ethereum as well. So that's kind of how that works. So what we want to see is we are in sort of, we've still within this, what we've got, this rising wedge. We want to stay within that. Ideally, we don't want to break up above, because the next sort of resistance area is at 73, and that's absolutely going to mutilate alts. So if you are not watching this chart, you need to be watching this chart, because this is going to tell you what alts are doing at this current time. And you want to have your money sitting on the sideline from alts until BTC dominance calms down, because this is just going to rip the heart out of the market. And as soon as that calms down, BTC's done its thing, then we can go back into alts. But at this point, Ethereum and maybe a few key alts are the only ones that we're going to be looking at, because there's nothing else across the market that is worthwhile right at this point in time. So another thing, we're going to see a lot of charts have hit key supports. So this is the total crypto market cap. It came down to $2.8 trillion. As Josh was saying, it's the lowest it's been for, what were you saying, Josh? Since November.
Since this year, I think it's the lowest it's been.
Yeah, so it's just looking a bit ugly, but that is quite a strong support. It's had quite a really good bounce to 3.04 trillion. So that means there's money sitting there waiting to buy these dips. And you should never, until we're in the full swing of the bull run, you should be on the sidelines with about 20-30% of your money buying these dips. So, and that shows today. One of the guys in the group was saying that he just goes shopping on a Mondays, and it's kind of been a really good strategy for him.
Yeah.
Sorry?
Seems, I was just looking at the comments coming through whilst you've been talking as well. People are in similar situations. Some people suggesting they're wrecked. Other people knowing that just examining Bitcoin as well. Also, another comment from Jay that Binance and Coinbase have been sending millions to Wintermute to force capitulation. They are the culprits, and this is not retail overreacting. So
Yeah,
lots
no,
of
of
theories
course.
out there.
There's always going to be lots of theories as to why this has been happening. Obviously, there's going to be a lot of OTC stuff coming in, and at some point, exchanges need to make money, and they haven't been making money. So they make money from fees. And when the market's sideways, you'll often see that they capitulate the market because they're the biggest holders of Bitcoin, Ethereum, and Solana and all the alts. And that way they're making money. So, and then they buy back lower, and they have the same amount in their stores. So it's brilliant. It really is. And that's not regulated yet. So they can still do it, and it's not illegal. So they're essentially going to be trading against us. They know where your stops are. They know, where those sort of key levels are, and they're going to be having some orders there. And that's why we see those regions just go straight up.
So it's a bit like playing poker, but they can see our cards.
Yeah, quite often.
Okay, that
So
seems fair.
especially, if people start to, if everyone starts to short the market now, then they're going to be seeing where the stop losses are for those shorts, and they'll push it back up. Then, essentially liquidating the shorts, causing bear tears, because you guys are all sitting there crying. We've got bull tears today. And yeah, that's what they're going to keep doing, and that's how the market moves, unfortunately. That's why leverage trading is just not great in this market until we get some regulation. And when you move out to DEXs and you start leverage trading and margin trading on DEXs, there is absolutely no regulation for that. And it's so easy to liquidate those markets because there's not a lot of liquidity there. And when we don't have a lot of liquidity in the market, it just will keep pushing lower and lower and lower, hitting all the stop losses. And of course, on a lot of DEXs, you won't have a stop loss. So it's just going to go down, liquidate, and then out you go. And so essentially the more DEXs we see come into the market, because they're, we've got the centralized exchanges, and then we've got the, those all have new laws like the micro rules for Europe and that sort of stuff. And then once those sort of, that restricts who can trade on those, then we're going to see a lot more DEXs, as we're seeing at the moment. They're popping up. I get at least 2 or 3 of these approaching me every day. Can I market them? The reason I don't market a DEX essentially is that, they're a high risk trading platform, and a lot of people go in just thinking, oh my God, I'm going to 100 times my money here. And you just get liquidated on days like today. And then you're just sitting there licking your wounds, and you come back and you go, oh my God, take my money. It's like, so, just be ultra cautious where you're trading. You're going to make, I totally think you're going to make more money in spot, but that's just my opinion. There's a lot more discipline required in it, and a lot more patience, because it doesn't move as fast. It's not like the casino. You've got to sort of pull yourself away from those instant profits. There's exchanges, like Bitmain, flashing lights that are like a casino. So you want to stay away from those sort of exchanges where they're just sort of flashing at you, because that is reprogramming you to go, oh my God, I need to check this in every day, every hour, every minute, sort of thing. And that's how they're changing. It's the dopamine levels in your brain just going bing, 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 bing. So maybe go for a walk, do some exercise, go for a run, get those dopamine levels in a different way, and just sit on your hands, and then do some spot trading, and you'll make lots of money. That's my 2 cents, 2 Satoshis.
There we go. Okay, anything else you wanted to quickly cover
Yeah, I'm
before
going to
we wrap up?
quickly have a look at Ethereum
Okay.
because it's hit a key support and it's had a really strong bounce. Now we want to get over this 200 MA. That is sitting at about 2,675-ish. We're just below that. It did go above that. It might come back down and retest. If we start breaking key supports on these larger coins, we've got to question, like, what sort of section is this chart in? Is it in an impulse? Is it, still very bearish? It came right down to the Elliott wave pivot and hit that and then went back up. So in a leveraged market, it can do that. It still has, this is a 3-day chart, so it still has a little bit of room to move on that one down on the RSI, and we don't see that reversal. We haven't seen a reversal yet on the stock or the traditional RSI. So they are still quite bearish. So I do think we're getting one more wave down across the board, but we want these key levels to continue to hold. Because if key levels start breaking down, that's when we're like, holy shit, where's this bull market gone? So Solana, this is probably one of the most bullish coins, obviously, because it's got all the shit coins on it. It's got so many meme coins, new one pumps and dumps every day. And I'm sure a lot of you are making money on that because it just keeps pumping. So, this looks like, this is a 3-day chart. So, and it's pumped up quite nicely. Let me just drop that down to a 4-hour and see where we're going. We can see that we've got quite a nice doji there. We haven't come down to the bottom of the channel. So 162 is the bottom of the channel, and that's still possible. If we do get another decline in the market, that could be the cheapest Solana you're going to get for quite some time. The pivot on this is 207. So it does need to break that 207 range. That's an Elliott wave pivot for this to come back, for it not to come back down. So breaking that range means that it's then in a more bullish pattern, and you want to be sort of putting some money into it. But at the moment, we're sort of like a snaking on the RSI at the moment. So we do have a bullish cross. This is looking quite strong. So I would be really watching that 207, 208 region for a reversal for Solana. And the other one that had a really strong bounce is XRP. And I know you guys love it. So it got 3 targets on one of our trades and it's come back down. But it is above this key support. So this is support that comes back down. So because it's touched, this is 1, 2, 3, it's got 4 touches, and on the 4th touch it broke through. And if you've watched me for a while, the 4th touch is a really important resistance or support to either break, because if it doesn't break through there, that would have gone down. At the moment, we can see that we're sitting on that support and we're above, and that's been a really one of the strongest bounces today, I think. So, 40% bounce is a really nice bounce if you've got had some really low orders down there. And that would have been on a support. It would have hit, it broke down beyond that support as well. So that's an interesting thing. So there must have been a lot of margin trades, a lot of leverage trades that just capitulated. So capitulation on a chart, we look to the volume and we see this like massive amount of sell volume. So I would say XRP has capitulated. It can probably capitulate a little bit more, but I think we'll probably see some sideways momentum for that one. And along with a lot of the alts that have had strong bounces, we might get one more wave, retest that support level, and then a continuation up on those ones, or sideways for a little bit. So while Bitcoin does its thing. But this is the candle to be watching tomorrow. We want to have a small body, long wick, and we will be good to go. And we want to ideally have that daily close above 96.
Okay, well, those are the levels to look out for. It's going to be an interesting few days, especially not only crypto, but I think in the stock market and in the general kind of economy as well. Well, the whole week will be interesting to watch. So, a lot to play out.
It is.
Okay,
It
cool.
is. So just before we go, so I was doing a Tony Robbins course, 4-day course. So, and just listening to it in the background as I work, and he is saying that, you know, the market is still in a winter, and we're coming to the end of that. So we're about, he thinks by his sort of what he's been told, his intel, we're looking end of Feb, early March, and the markets are just going to have all the little springs coming up, and it's going to be super green. So on his lives, he was saying basically, you know, start DCAing over the next couple of weeks. They're going to be your long-term bags for at least 6 to 12 months, especially in the stock market, because that works a little bit differently to the crypto market. And, you know, you're going to be super green very soon. So this is short term. So stay away from leverage.
Yeah, of course. There's a lot of different perspectives to have, and to be aware of when doing this, I guess. Okay, cool. Well, let's wrap it up there. Thank you everyone for joining us. Of course, if you are in getting started in crypto, feel free to carry on the conversation in the live chat, where we are in and chatting away. So, but otherwise,
and make sure you guys like and comment on my Twitter, because like I think something X is hiding me away. It's like the more I post, the less anyone sees. It's like, oh
dear. Okay. Well, in that case, also, yeah, reply and like Lisa's X. It's not Twitter. That might be the problem. You're looking at Twitter still, which is now X. So there we go. Okay, cool. All right.
Okay.
Thanks everyone for joining. Have a great week ahead. Bye.
Catch you soon.